can you get a commercial valuation on these? Like if you were doing a 6-bed Serco.
Yes,
valuation?
but on the market rent, not the passing rent. I hear you ask me, what's the difference between the market rent and passing rent?
So what is the difference?
Now, come to me with a 25-year council lease, fully FRI rent reviews every 2 to 3 years. That's a different question. Because that's guaranteed income from the government. Yeah? With no break clauses, that's worth money. Yeah, you could probably get a yield-based valuation off the passing rent in that scenario. So many clients come to me and go, I'm renting this out in emergency housing. Yeah, I'm getting double or triple the market rent. My property's worth 3 times more now, Bruce.
No, it's not.
I want 75% of the
£5 million.
£5 million. It doesn't work like that, unfortunately. Okay.
How does it, like, a lot of people are also coming to me, Bruce, and saying, look, I want to give it over. I don't like that sort of hassle. Can I hand it over to some provider and, just hands-free, long contract? Yeah. And I'm going, well, how is that going to impact? What kind of finance can you get? And is that going to impact, do you think, end values? What are the lenders looking at? Because some people, they seem to get low leases. Some people seem to get these crazily high leases. And then they're going, oh, this building is now worth X. So I want you to dispel a lot of the myths around the whole social housing.
Talking about social housing.
Social housing
let's nail
side.
it. Okay, it's social housing.
Social housing. So if you want to do one of these social housing, proving very popular in the market at the moment, what would you suggest? What are the lenders that you need, and what do people need to look out for? Because I feel on the social housing side, there's so many different providers, and everyone's going, mine's the best, or this is good, but actually, it's the wolf in sheep's clothing. I think some of them are.
Yeah. So let's start. If I was the investor, okay. All right. So I've got a 6-bed, 6 ensuite.
Yep.
We love those. And who would I rent my property to? Let's start there. First thing I'll do is I'll go on the government website to social housing registered providers. And I would make sure the registered provider, which I'm handing my property over to for 5 years, is actually a registered provider in the first place.
Yeah, so there are these things called registered providers and non-registered providers, and some people, therefore, aren't registered.
Yeah.
They're a bit more what I call a social housing provider, because you get people who are genuinely doing social housing stuff, but for some reason aren't a registered provider. And then there are those who are kind of like, oh, I'll lease it and they're actually leasing it onward to someone else. I've seen those before as well.
And then you've got no control.
Yeah. And they always say, they won't use the words government-backed, but someone somewhere the government is involved.
Yeah.
But like essentially there's a lot of hands it's going through in the meantime.
Yes. And I don't like that.
No.
Yeah. I like direct to social.
So that's tip number one, is think about having direct relationships rather than through third parties who are like maybe the sourcer or this or this.
Correct.
Have a look through who you're actually leasing to. Make sure that they're steady eddies.
Yep.
They've got the wherewithal to actually guarantee your rent. How many other properties have they got?
Yep.
That kind of stuff.
And look at their accounts.
Yeah, the accounts is critical.
Because I want rent in to pay the mortgage. If they're people of straw or a company of straw, they're more likely to wobble a bit. Yeah, and you may not get your rent on time, and therefore you may have problems paying your mortgage on time. And that's the last thing you want.
Yeah. And also, look, I don't want to, a lot of people are doing some good work in this sector, but sometimes, they're not necessarily, their focus isn't commerciality. It's about care. It's about looking after people or whatever.
Yep.
Therefore, the finances might not be looked after in the same way as a commerciality arm.
I buy that, but you still want to lend to a big enough company who's got a financial controller.
Yes, but that's what I mean. Is I'm saying just beware. That's my point. My point is like, obviously, the bigger the RP, the more official the RP, the better financial controls, and these smaller people who are doing it out of been a little bit more come from the care side, so to speak, and have gone, well, we can nab this house and this house. Might not be quite so financially.
Agreed.
Maybe I may be stereotyping and being a bit harsh here.
Perhaps.
But it's just something to think about.
Yeah. And the next point is who's actually going to be living at the property? Okay. And is there any care taking place in the property? Lenders hate when you've got any sort of live-in staff or offices or anything like that, because you're sort of verging the C4 property more into C2 care homes, aren't you? And they're worried about usage again. So if you've got people staying overnight, looking after people, it should be more of a nursing home. So C2 planning instead of C4.
Yes. So let's just quickly touch on our, C1 is often
hotels,
the hotel bed and breakfast type thing.
Yeah.
C2 can be HMO stuff, but it's HMO with care. There's a care element to
Correct.
it. So nursing homes, children's homes, that kind of stuff, which is a little sneaky thing that is, I feel, starting to bud in popularity out there in the investor world because they're thinking there could be more money. But essentially, that's a care thing, not like a property thing. C3 is obviously a family home. C4 is your HMO.
But what have you forgotten? You've forgotten C3B and C3C.
Okay.
Which is another subsection, where it's when the council are desperate for social care or accommodation for a certain demographic. And they waive, even if it's in an Article 4 area, they waive everything, and you can have a little bit of care in there. So it's a bit of a minefield.
Yes, there's a subsector, isn't there, in the C3, which is C3B.
C3C.
Which for a little while I thought was a loophole. I was like, is this the way to get around Article 4? But in reality, I never really made anything of it. But it is a subsector in there.
Yeah.
So
if you want the best rates in the market for social housing, and you've got a bog standard 3 or 4 or 5 bed HMO, not over adapted, a couple of bathrooms, rented out to Serco or Mears, which are big corporate bodies.
Yeah, so they're big, aren't they?
They're huge.
They're the big ones.
They're the big ones. If it's Serco, I would go to Fleet. Fleet have got great HMO, bricks and mortar, buy-to-let.
So can you get a commercial valuation on these, like if you were doing a 6-bed Serco
yes,
valuation?
but on the market rent, not the passing rent. I hear you ask me, what's the difference between the market rent and passing rent?
So what is the difference? So the difference between the passing rent, Bruce, and the market rent is what?
Is the market rent is what the room could be rented out for on the open market, okay?
Yep.
The passing rent is what you're actually receiving. And the valuer will work off the market rent. The underwriter will work for the rental stress test, will work off the market rent or passing rent, whatever the lower is.
Yes, so although you might get a market rent of up here, and obviously sometimes social housing providers, because it's guaranteed rent, taking into account maintenance and stuff like that, might be lower. They're saying, well, because that's a lower figure than the market rent and the valuation of this property's up here, they're actually, you could be hitting stress tests.
Could be hitting stress tests.
But do they take into account the fact that some leases might be fully repairing leases?
Yes, they do, but there's no real inherent value to a 5-year lease. Now, come to me with a 25-year council lease, fully FRI rent reviews every 2 to 3 years. That's a different question, because that's guaranteed income from the government. Yeah, with no break clauses. That's worth money. Yeah, you can probably get a yield-based valuation off the passing rent in that scenario.
Okay, but that's not very common, is it?
I've seen 2 out of the hundreds I've seen.
Okay.
Okay?
So before everyone's rushing off, where are these 25-year
They're not,
leases?
because the councils are broke currently, and they don't want it on their balance sheet.
The main thing I find with the councils is, as you say, they don't want to commit to anything because they can't,
Yep.
and they don't want to these days, and therefore they will pay better rates for non-committal,
Correct.
which then causes its own problems.
Yep.
Because obviously people can come and go, but it's like also for though as a borrower though, if they haven't committed anything, it's difficult to. What is the contract with them? What is it? What is it? So again, you need to have visibility of clear contracts and things like that, don't you?
You do. And so many clients come to me and go, oh, I'm renting this out in emergency housing. Yeah, I'm getting double or triple the market rent. My property's worth 3 times more now, Bruce.
No, it's not.
I want 75% of the
£5 million.
£5 million. It doesn't work like that, unfortunately. Okay,
but they don't. But again, you know that's quite hard to fund, isn't it?
It is. Once again, you need to go to the right lender.
Yeah,
and you need to be crystal clear what the tenant profile is. Okay, emergency accommodation is generally, sad to say, abused.
Yeah, there's
women,
there's a reason
men,
why people are suddenly having to be housed somewhere.
Yeah, emergency.
I mean, there's lots of different types, isn't there? Lots of different. So, what would you say you see most common in the market at the moment, and therefore the lenders because I find that lenders always tail the market, and you have to have some groundbreakers who start lending on this stuff.
Yeah, and then they follow,
and then other people will start to
Serco
do it.
Serco and Mears all day long,
and then the lenders, and because
they understand the contracts, they just see, oh, it's a Serco lease, and they may not even read a lease. They just go, oh, it's Serco, or we lent on that before in the past.
Yeah. Okay. So the familiarity.
Yeah.
So the bigger players. So coming back to like what is going to make your social housing guaranteed rent type project work? It's about leases, bigger providers, more common providers, registered providers, with good contracts. Obviously, you've got to negotiate. Do people seem to negotiate these contracts?
Yep. Go back 6 years, and Serco never negotiated. Never.
They just needed properties.
Yeah, but now they do because they need properties. So they go back 6 years. All Serco contracts were 6 years and 11 months. Why?
Yeah. Oh, because obviously when you get to 7 years, you have to register that with the land registry.
Spot on. But now they've understood that lots of the lenders won't lend in that scenario.
Right.
And they are now either putting a break at 5 or just putting it down to 5. Serco never used to do that.
Mm.
Now
they're adapting.
They're adapting
because they want more properties. I mean, obviously, there's an expansion of this market.
Yep.
As we know, politically, you can see that's going on. But there's an expansion of this market. But the lending is obviously now catching up with the market.
Correct.
Which is why.
And also the providers are working with the lenders more.
Yeah, so there's a communication.
Quid pro quo here.
There's a communication because any lender is always worried, isn't it? If there's vulnerable people in a property, if I have to repossess it and I need to then
I don't want to be seen chucking out
I don't want to be
single
chucking
mums.
out, these are the vulnerable people that I have to then chuck out. Not sure whether we want that political risk when you're doing your pest analysis as a bank and underwriting. I might as well just do this the normal student housing or professional housing.
I mean, the lenders have got queues. They've got so many people wanting to borrow money from them. They can be picky. And so if you got small HMOs, go to fleets. Okay, if you want to go for the higher yielding, as in higher income, from go emergency housing. Okay, but if you go down the emergency housing route, try and get a form of contract where there is a step-in right from the lender. This seems to be the biggest issue. There's no step-in rights that the lender can get vacant possession. Okay? So if you miss your mortgage payments, the bank just wants to sell the property. with the old Mears contracts, there was no step-in rights. The bank could never repossess the property until it was vacated. Step-in rights basically means the lender can go in and ask for vacant possession, and then the provider or whoever's there has to release the property or empty the property.
Okay. So that's a critical development that's happened in the social housing market over the recent years. Because obviously there was a big boom, I think, in COVID for social housing, and people seem to like it.
It was crazy. We had lenders like Shawbrook who were scared about their student loan book because it was literally remember in COVID, all the students.
Oh, no students. Yeah. So you had a year of like, should I be actually bothering with accommodation?
Yeah.
Because I don't know how much time I'm going to be spending at uni.
And they all working on
and everything was at home anyway.
Online.
Yeah.
So all these student HMO landlords going, how do I fill my property? And they started to speak to the lenders and say, can we rent it out to social housing providers? And that's when the likes of Shawbrook actually looked at social housing to protect their book of business.
Yeah, so they went, well, hang on, we want people to get some guaranteed renting.
Yeah.
Seems like a good
Good idea.
So that we can continue to get paid. So they were like, yeah, we'll do this. Yeah. And that's where the shift happened. That's where they moved away. They
Correct.
Got off their
and that was the same with a lot of lenders. It wasn't really on their radar. But because of COVID, it's now on their radar and they've now got comfortable with it because they were forced sort of to allow the landlords to rent the properties out.
Yeah. So what do you think? I mean, obviously we're recording this near the beginning of 2026. Where do you say, over the next 12 months, the opportunities are within the HMO market? The type, is it down the social housing route? Is it continuing? For me, I still very much like the professional 7-bed sui generis, 7 ensuite. If we can get the pot noodle stations in there, even better. But like to recycle your cash, go again. To me, stands the test of time.
Yep.
There's always professionals, always people requiring accommodation.
Yep.
It's a great thing, and it's proven. Where do you think the opportunities are? Where are the populists? Where are the people that say, Bruce, I need some financing? Where are they all? What are they doing? Is it different in different parts? Are they, one thing we didn't pick up on, which is when an Article 4 comes in, are they going, right, let's fill my boots before Article 4 comes in and then the values go up? What are we doing?
Right. 3 things I want to talk about.
Yeah.
Okay. I'll be brief. Okay. Yeah. So as soon as you see councils chitter-chatting about Article 4, I tell my clients, just bundle in, get involved straight away because Article 4 will come in place. And Coventry, Article came in September.
I think it was September 2023 it came in, or maybe September 2024.
Anyway,
2023 came in, bang.
And we're now, because of that restriction, we're now seeing the uplift on commercial yield-based valuations. Yes. They're moving from bricks and mortar to. It takes time. It takes time for that market to develop.
But the problem
is a bit of a lag.
A valuer has to come in and goes, "Where's my comparables?" Well, there ain't any comparables. Yeah. So they need to build those comparables and eke it up because then there'll be some sales at these higher levels.
Yeah. So it takes 12
time.
Takes 12
I remember when it came in Portsmouth, the houses went up just before Article 4 because everyone wanted to buy houses that they could convert and say, right, we're already running them. Then the commercial values went in and they went up.
Oh, right. Yeah.
And then it's just continued as the rents have gone up because there's a shortage of them. There's a restriction and not everybody's now converting them.
Yeah.
And there's a growth in population there. Goes up again.
Exactly. So you got the Article 4 bit. Yeah. Yeah. Jump in before Article 4.
So number 1 is Article 4.
Number 1. If you want basic HMOs, you want to be an armchair investor and you're not really wanting to recycle a lot of money, just do C3 to C4 in non-Article 4 area and do 4 or 5 beds and then rent it out I think
it really depends. For me, like the 4 beds really depends on where you are.
Yeah.
Because you have to get it cheap enough. because like if you don't get it cheap enough, because otherwise you got the first 2 rooms covering the mortgage, the next room covering the bills, and then the next room covering the lettings agent if you want it passive. So then there's not much left for you.
Correct. That's why you should go down the route social.
Yeah.
Do a Serco.
Yeah.
On a 4 to 5.
4 to 5. So if you're going small, probably do the contracts.
Because
no hassle. Because as soon as you get one empty, it's a quarter of your rent gone.
Correct. And you've got no lettings fees.
Yeah.
You've got no management fees. You've got no voids.
Yeah.
Yeah. Small HMOs, Serco.
Yeah.
Yeah. Social housing, day one.
Yeah.
If you're looking to build that portfolio and you're trying to use what your uplifted rent, what we talk about, the professional HMOs, which the market rent's 800, but you're getting 600 or 700, but you're getting 800, 900. Yeah, you need to do the professional stuff if you were trying to drive up that value and recycle your cash and build that portfolio, which you're doing.
Yeah. So I think that's a good thing, and I think there's a big discrepancy in the marketplace over rents.
Yep.
There's a big discrepancy, which is why valuers can get it wrong. Coming back to sort of the original things that we were talking about, which is why it's critical to get some proof and to fill them quickly and to get the higher levels and they're there. So on that note, you're saying basically there's some 3 areas that we're talking about is have a look around anybody who's converting Article 4, invest before or just after. It's probably just
Chitter-chatter on council's website.
It takes, I think they have to go through a consultation.
12 months normally.
So it's about a 12-month consultation. So you've got time to get 1 or 2 in there.
Yeah.
If you've got lots of money, you can get even more. So get on with it. If you just want a simple, smaller HMO that's simple, I go back to the old-fashioned Magnolia HMOs or student HMOs. Put some social housing contracts on those. It's going to be simple and easy.
Yep.
And when they're probably done, you sell them back as a house anyway.
Yep. Nice and easy.
And you've had the capital uplift in the house. But if you're going to be serious about HMO investing, do the model of building a portfolio, aggressively refinance, pull your money out, go again. And I say do that for a while. And then when you come to the end, think about, you might start to pay some down, de-gear a bit if you've spent 5 years being aggressive, then spend the next 5 years sort of
correct. You go through the phase,
and then the cash flow starts to come in.
It really kicks in,
and then it kicks in even more. So imagine going from so you have 500k, you go and do several of these, you end up in 5 years' time with 500k back in your pocket, 500k income, and then you slowly de-gear yourself, and so your income's going through the roof, and you then set very well into retirement.
Spot on.
So I think. On that note, I'd like to thank you for coming along to have another chat.
My pleasure.
Fireside chat, although there's no fire.
Yeah, we need a fire next time.
Fireside chat of HMOs. And I think it's been really interesting to tap into your knowledge around the whole valuation process and that detail that I don't think enough people pay attention to that allows their HMO projects to go smoothly. And therefore, we'll put in the show notes below when we have our events, how to get hold of Bruce. And, thank you for coming along.
My pleasure, Mike. My pleasure.